Well, pricing seems to be on everyone's mind. In your 5 predictions for 2022 blog post, you talk about a coming property pricing and profitability reckoning driven by inflation pressures and more systemic problems like upended risk models and increasing capital requirements. Kenneth, is this reckoning to come as ominous as it sounds?
Uh, Certainly, Abby, maybe it was a bit of a hyperbole in the framing, but I do think there's a very, very substantial change and a very, very substantial assessment that's going to happen in property. And we need look no further than even the last few weeks of the year in North America, for example, where we had tornadoes running through Kentucky with massive damage. We had a flash wildfire running through Boulder, Colorado, causing a bunch of damage. These are not things that we are typically expecting to see in the middle of December, right? Tornadoes and forest fires. And I think that fundamental change that we're seeing from extreme weather playing out in property is going to cause a real change in the fundamental economics of property insurance. So I do think there is a substantial reckoning that is going to have to play out in how property is across the full chain, how we think about the actuarial capital reserving and pricing, how we think about the actual underwriting and the product side, how we adjudicate claims, and how agents actually sell and market around property risk. I think it is a major change, and certainly, as you said, driven off inflation and generally kind of a real estate market on the consumer side, major changes in usage of commercial real estate, lots more vacant, empty buildings, and everyone's very familiar with the fact that actuarial models have shown that vacant buildings tend to be a lot more prone to risk. So I do think, maybe you can take fault with the choice of words of reckoning, but I think in terms of whether in fact we're going to see property come under a lot of scrutiny and a lot of change, I absolutely think we're going to see that.